Hey there, Matt the Mortgage Guy, recording this video on Saturday, August 15th. A little impromptu. I just thought it was important to get out some information about a wild week we had in the mortgage industry and some things that happened that have never happened before, how it will affect you. So before I go on, I'm going to publish this to YouTube, to Facebook. If you like straightforward, easy to understand information who ultimately is for you, the consumer, watching this in simple terms, please consider subscribing, smash the like button for the YouTube algorithm. If you're watching it somewhere else, then just maybe a thumbs up. So without further ado, on August 12th, which was Wednesday, after hours, the FHFA, and for all intents and purposes, it doesn't even matter who they are, Fannie, Freddie, FHFA, that doesn't mean anything to consumers. The folks who buy all the loans from all the lenders and have control over pricing to a certain extent decided to just add a tax, a refinance tax, and that's what it is. And that tax they added, that the consumer ultimately pays because the lenders have to raise their pricing, is 0.5% of the loan amount. So on a $300,000 loan, that's $1,500. On a $400,000 loan, that's $2,000. And honestly, it might even cost the consumer more because lenders that have all these loans that are going to be delivered post September 1st to Fannie and Freddie that have to pay this tax, they're going to have to eat that cost. What usually happens in times like this where mortgage companies, or any company for that matter, has to pay an extra cost for what they're doing, they're going to add that on the consumer, and they're going to add a little bit more to pay future costs. And so it might even cost more than a half a point. But long story short, what a lot of people think was a terrible move and terrible timing by Mark Calabria, who heads that FHFA, add this tax to pretty much the American people. And I heard some crazy numbers, like $150 billion a month is what that's going to add, FHFA's bottom line, at the cost of the American consumer. And so here we are Saturday, 3 days later, tons of different mortgage organizations and mortgage originators across the country are doing all they can to talk to their congressperson, talk to their organizational leaders, and submit something to say, you guys have to overturn this. One, this is terrible timing. And two, it's just, not cool. I don't know how else to put it. So anyhow, I've heard talks of it getting overturned. And so what I'll talk about now for anybody who's in process, thinking about refinancing, what it means to you and what you should do, because I think that's the important part. What I'm advising a lot of my clients is my in-process clients. I'm able to discount my comp to kind of make up for it, and they're not going to see a change. My clients that I've been talking to or they're considering refinances, I'm telling them, hey, let's get started. Let's wait and see what happens. The good news about refinance is we could submit a refinance today. We could wait to see if the market gets better, if this gets overturned, and what happens to pricing in 1 week, 2 weeks, 3 weeks. If it gets better and the refinance makes sense, we proceed. If it doesn't, we don't proceed. And it's as easy as that. And so that's what me and my clients are currently working on. And if you're in another state or in California working with somebody else, I think that that's probably a good game plan, because I'm optimistic. I'd like to think that they're going to do right by folks and, overturn this or do something to, postpone it or something to that effect. It's just not a good time to tax the American people at a time where they need it more than ever. Refinance, save a couple $100s a month during these times. It's more important than ever. And so to throw a tax on there, it's greed or at very best, ill-timed. So that's that. Any questions at all, please feel free to reach out. I feel like I might have missed some stuff, but that's the gist of it. And honestly, I've heard talks in other groups, and when you really think about it, this half of a point cost, if you want to think about it as, $300,000 loan, it costs $1,500, or you can think about it if the 30-year fix was 2.75, now it's 2.875. It's about 1/8%. If you talk about it as far as rate change, or same rate, half a point difference in cost. Either way, rates are still at historic lows. Refinance still makes sense for hundreds of thousands of people. Purchase, you're still getting lowest historic rates ever. So it's not the worst thing in the world, but it sure as heck doesn't mean it's fair or right or not being fought by a bunch of people who think that this isn't the time to do that. So that's that. FHFA, August 12th, implemented this refinance tax. We hope it doesn't stick. It might. Even if it does stick, it's not the worst thing in the world. Rates are still, great. But here we are mid-August. Short term, rates ticked up a little bit. Long term, we think they'll get better. That's just, me and some of the smart folks in the industry that I follow's best guess at something that we certainly can't predict. All right. Thanks for watching. Hope you have a good one. Bye-bye.